please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
India holding out quite nicely with a powerful display. Ronit is here. Lots of tail enders. Actually, some of them are pretty interesting, reasonable sized companies as well. So, Ronit, round up the good, the bad, and the ugly, if any.
So there'll be a lot of numbers coming in post-market as. So I'll start with DFM Foods. Strong set coming in. The company has rebounded well post-demonetization. Revenue was up 21% as well as the margins expanded by 300 basis points and the PAT was up 16%. Moving on to Den Networks, revenue was up 20%, but the reduction in expenses stole the show and that led to an EBITDA uptick of more than 185% and they reported a PAT versus a loss. Moving on to TV Today, good set again. Revenue up 9%, margins up 500 basis points largely due to a reduction in their expenses. So you can expect that stock to be in the green. Moving on to Saurashtra Cement, the stock is up 35% in the last 3 months and the revenues did not disappoint. The margins came out 400 basis points high as well as the PAT more than doubled to 10 crores. Moving on to Trent, pre-demerger good set of numbers coming in. Revenue up 18%, was the net profit is up 38%. Moving on to the weak set, Titagar Wagons, the stock trading near its 52-week high but the numbers came in very bad. Revenue was down 9% as well as they reported a loss versus a profit. Moving on to Sudarshan Chemicals, the street was clearly anticipating weak numbers.
Very quick roundup, Ronit. Mangalam, you're going to tell us about the GST stocks which definitely will be on the market's radar.
Absolutely, Lata. So they have been on the market's radar in yesterday's session too. They will continue to be on the market's radar. So here's a revision or sort of a cheat sheet to keep an eye out on in terms of stocks related to GST. Ceramic tiles, plywoods as well as sanitary ware, all these three sectors expected the GST rate rationalization to come by from 28 to 18%. So we have the likes of Kajaria, Greenply, HSIL and Cera as well. Not just the building products, we have the wall painting products as well. Paints, some rationalization is expected too, so watch out for Asian Paints, Nerolac, Berger. Luggage, like I said, we have VIP and Safari. The management told us they expect the rates to come off there too. Cables, wires and switchgears. Havells was buzzing in trade yesterday, so we'll watch out for those stocks today too. Watch out for the consumption pack. FMCG did well in yesterday's session. HUL, Jyoti Laboratories and Godrej Consumer, some rationalization expected in hair dyes, detergents as well as shampoos. Watch out for restaurants. Out there, the devil is likely in the detail because while the rates are expected to come off from 18% to 12%, we'll watch out for the input tax credit clause. All these stocks likely to be active in trade today with the caveat that the underlying texture of the market will rule the roost.
Okay, Mangalam, thanks a lot for that. Let's just revisit financials, Lata. In fact, there could be some important development for the bond market.
Yeah, actually it could be good news and that slipped my mind. Yesterday the government said that it has excess cash balance and it has been doing that several years. In the last quarter, this time it's announced it a little earlier. They are buying back bonds earlier. Now, that's because they have cash. So if they buy that, there is a demand created and therefore there is a chance that bond prices move up and yields fall. So 10,000 crore is what they're going to purchase on Monday. That will be perhaps taking the bond yield to 6.9 rather than 6.95. Definitely a positive for the moment.
Absolutely. At least some relief coming in with the way the yields have surged in the last couple of days. Okay, let's quickly recap our list of stocks for the morning then. Stocks expected to gain are Tata Motors, L&T Finance, Reliance Capital, Mirza International. Actually, these were the ones that Anuj was pointing out have been extremely weak, L&T Finance and Reliance Capital. Mirza International could see some good gains. JSPL, Just Dial, Aurobindo Pharma, United Breweries, SAIL, PTC India, DFM Foods, Den Networks, TV Today, Saurashtra Cement and Trent. Stocks that could see some pressure are Axis Bank, CG Power, SRF, Titagar Wagons and Aptec.
I think just L&T Finance and Reliance Capital, Anuj pointed out, could be in the red.
Exactly.
I think they were mistakenly in the green. He was just alerting it's possible that they continue to remain in the red. Okay. Well, with that, let's move to definitely the stock of the morning, Tata Motors. Hitesh Goyal of Kotak Institutional Equities joins us on the show now to give us his view. Hitesh, first thoughts, how much have you changed your price target after looking at the higher than expected revenues and more importantly, the margins?
We have not changed our price target much. It's at 535 versus 545, 540 earlier. Basically, the reason is that there was a cautious commentary on volume outlook for JLR in the con call. So we've cut our volume estimates a bit on the JLR side, whereas there's a lot of comfort which has come in on the margin side because of the cost reduction initiatives they're taking both in JLR and the standalone business, and also the reported margin will improve because the hedge losses are coming down. So there's a lot of comfort on the margin side, but the volume growth outlook has got a little muted.
Yeah, Hitesh, good morning. Actually, that's the point, right? Because because these are July to September numbers, and we've seen October sales maybe not as good. So in terms of volumes, have you adjusted your numbers downwards? And if yes, how much? And how much of that would be compensated by increase in margins?
Yeah, so our numbers have not changed, like I said, on the earnings side, largely because margins has gone up and the volume estimates on JLR have been cut by 3 to 9% over FY 18 to 20, because we were taking a double-digit growth, which looks little unlikely now. In our view, because most of the growth will come from the China JV and not from the imported models that go into China, right? So, so my sense is that the volume growth outlook has become a little sluggish, but there's a lot of comfort on the margin side coming through now because they've given much more disclosures on the con call and the PPT on the cost reduction initiatives and the the hedging losses that they have currently on the book.
So Hitesh, earlier obviously the markets, was really preoccupied with seeing whether JLR's margins can come back. Now that has happened, but the new concern is now volume. 3 to 9% is the volume growth you're expecting over FY19, did you say? And also just in terms of triggers for a stock, what do you think will be the bigger trigger? If they, let's say, sustain margins at current levels, 11.5 or so, will that be more important or will volumes be more important and therefore the price action that you expect?
So basically, if you look at volume estimates, we're looking at 8% growth in JLR volumes, including the China JV, in FY18, with increases to 10% in FY19. So basically, and this is mostly coming from China JV, like I said, because in the UK PNL, the growth is single digits. So that is one point. Second point is that on the margin side, reported margins have been 11%, but they will improve to 16% going forward because the hedging losses will come down. These are reported numbers that we are talking about. The clean margins in this quarter, ex of hedging losses, was 16%. So we have a lot of comfort on the margin side, but the volume have been a little subdued.
Oh, right. Point taken, Hitesh. And with that, we'll thank you and move over to the Oro Pharma conference call where Mr. Govindarajan is speaking.
Sales witnessed a growth of 26% on a year-on-year basis to $327 million. The growth was primarily driven by new product launches and improved volumes of existing products. We have received final approval for 2 ANDAs and tentative approval for 3 ANDAs during the quarter. We have filed 21 ANDAs, including 10 injectables and 1 from Oralife. We have launched 8 products, including 2 injectables in the quarter under review. Aurobindo USA, the company marketing oral products in USA, has witnessed a growth of 37% year-on-year, driven by new product launches and volume improvements. On sequential basis, the sales increased by 47%. Aromatics, the injectable business, clocked a growth of 21% year-on-year to $46 million. We have filed a total of 90 injectable ANDAs as on 30th September 2017, out of which 51 have received approval, including 2 tentative approvals, and the balance 39 are under review. The company, as on 30th September 2017, has filed 463 ANDAs on a cumulative basis, out of which 294 have final approval and 40 have tentative approvals, including 11 ANDAs which are tentatively approved under PEPFAR program, and the balance 129 ANDAs are under review.
Well, the trade setup this morning is not looking good for the bulls because the SGX Nifty is indicating a gap down. That's come off the morning low point, but still down about 43 points. If you look at the Asian screen, the developed markets are actually down. The Nikkei is down. Hang Seng has actually moved into the green, but that correlation has been broken for the last 2 or 3 days. So let's see how things move from here. Ashwani Gujral, Mitesh Thakkar and Prakash Kaba now join us. Good morning, gentlemen. Ashwani, is the first trade long or short? We were discussing this yesterday that maybe the things have bottomed out, but the SGX Nifty this morning is indicating that we'll again have a gap down.
Good morning, Anuj. Well, the first trade in the morning for most people would be to sell and maybe look for lower targets. But I don't think I want to take that trade, because we will be opening very close to yesterday and day before's lows. And often we have seen that, chances are there is no follow through, and by the end of the day there is a recovery. So the shorts that get trapped in the morning, they may have to cover maybe because of SBI results, etc. Because the market has not shown an eagerness to move lower. So while I have given my first trade as a sell because I didn't know how Asian markets will react today. But given the scenario that we have now, I think 50-point gap down, the first trade I would like to do is buy and then see what happens. But the way to buy it is as it moves above the opening high or at least above the half-an-hour high. That's when you buy, when you see some amount of strength.
Yeah, good morning, Ashwini. There are a bit of positives that should help the market. The bond yields could do better. The GST news is awaited. SBI results are expected to be better. There's little worry that it might disappoint the market. But the point is how much of this is already priced in. So how would you play the Nifty Bank?
See, same thing on Nifty Bank. Nifty Bank yesterday, rallied 200 points from the lows. So if today, it kind of opens 100-point lower, there'll be a 50% retracement of, yesterday's entire rally. So Nifty Bank is the better buy because that is where more strength is visible. So in case I get Nifty Bank, say, closer to 25,380, 400, that would be what I would like to buy.
Okay, so Ashwini has a positive bent of mind with respect to this Friday. Let's see how the opening trades play out. Mitesh, good morning. How are you looking at things? Do you have a clear trade either on the way up or down on the index?
Good morning, Sophie. I think yesterday also we highlighted that the Nifty Bank is the index to trade, and it was trading at very important support levels of 25, 150, 100. So I think in case you get an opening which is a gap down and we get the Nifty Bank trading around the 25,200 mark, I think excellent levels to enter long afresh and keep a stop below 25,050. If this support holds, I think, which I believe it would, then I think there should be throwbacks coming regularly on the upside, and these bounces can take the Bank Nifty to 25,450, 500 as your first target. And in case you get a stronger trend, then even at higher levels. On the Nifty, I still believe that choppiness will continue. I think 10,240 to about 10,400, broadly thereabouts is the range, and we might not get a clear trend for next few days.
Fair point. Good morning, Prakash. How are you trading the Nifty?
Good morning. Well, when I look at the Nifty in a larger time frame, 10,360 is a stiff resistance out there. As long as that is not taken out, we must assume it's down. But on the lower side, we have seen good support around the vicinity of around 10,260, 270 zones. So if this gets taken out and trades below that, there's a very good chance we could see a slide to levels closer to around 10,240 to 10,200 to maybe 10,184. That's a possibility it's going there. But we have to see how many people are trapped in the regions of 280 to 70 zones. As long as that holds, there's a very good chance we can go back, bounce to around 10,380 zones or 400 zones. So it's tricky out there. It depends where it opens.
Okay, fair point. Let's discuss individual stocks then. Ashwini, buys or sells?
See, IOC is a sell with a stop of 405, target of 380. Cadila is a sell with a stop of 485, target of 460. India Cement is a sell with a stop of 177, target of 164. United Spirits can be bought with a stop of 3080, target of 3200. And Titan is resuming its rally, so probably that's a buy with a stop of 770, target of 805.
Okay. Mitesh, yeah, on the Bank Nifty, you're asking us to watch the 25,050 level as the Plimsoll mark.
770, target of 805.
Okay. Mitesh, yeah, on the Bank Nifty, you're asking us to watch the 25,050 level as the Plimsoll mark. Any NBFC stocks?
The only one which I have, Lata, is on the sell side, that's L&T Finance. But overall, I have a mix of buy and sell calls. Amara Batteries clearly had a reversal day yesterday, so a gap down should be even a better buying opportunity in case we get one. Buy with a stop below 713, 765 being the short-term target. The second buy call which I have is Kajaria Ceramics. We had a call yesterday as well, but I think clearly there's enough strength to suggest that this will see follow through in the next few days. Buy with a stop at 701 for targets of 765. And three sell calls. ITC has had some kind of continuation pattern on the downside, so sell with a stop at 265, look for targets close to about 251. ACC, some intraday sell signals there. That's a sell with a stop at 1774 for targets of 1730. And L&T Finance, it's been a sell earlier as well, a couple of days back. Now I think it's showing continuation signals on the intraday chart, so sell with a stop at 191 and look for a 182 kind of a target.
All right, fair enough. Prakash, let's come to your stock list as well. What are you working with today?
I'll start with Amar Raja Batteries. Good base formation, looks like it has bottomed out, climbing to levels closer to around 770, 780 zones. Stop below 710 should be fine. CESC is another stock, looks like it's a bottoming out process going on. This should propel the stock to levels closer to 1040. Stop below 995. I also like India Bull Housing. Looks again a bottoming out pattern out here. This up move could continue to levels closer to 1300 zones. May take a day or two for this. Stop below 1200. And a solitary sell, that's Chennai Petro. Looks more of an exhaustion pattern here. Could see a slide to levels closer to 420 zones. Stop above 458.
Well, results season, so let's look at one more important company. PTC India posted a good set of results in the second quarter. Top line beat earnings, while revenue sees a solid 30% jump. Deepak Amitabh, the chairman and managing director of PTC India, joins us on the phone line. Good morning, Mr. Amitabh. First up, sir, if you can tell us how much of trading volume you did, and how do you're already seen 1.5 months of this quarter. So how may this quarter as well look like in volumes?
See, as we have maintained that in the last quarter, volume grew by about 8% to 16,800 million units as compared to 15,500 million units. And we believe that we should continue with the double-digit growth during the whole year, whether it is in volumes or into our earnings, etc.
% volume growth?
Yeah, volume growth will also continue in double digit.
So for the year as a whole, sir, when you say double digits, are you talking about just the starting of the teens, mid-teens, you know?
See, because as we have always maintained, there is that our effort is to keep reaching more and more long term, because short term can be very volatile.
Right.
Do very well. If the utilities don't come up with the deep platform, etc., then the volumes can go down in the short term market.
Sure. Actually, that was the question, sir, that I also had in mind. If you could break down this quarter's growth into short term and how much was it long term, because this was a quarter when we saw short term rates go higher. So was that a reason why we had such a good performance this time, or was it also because of good long term contribution?
Both. It accounts for both, because as you rightly said, that the exchange, we are one of the most dominant players in the exchange business. So if the exchange prices goes up, our top line will grow up. But also, more and more long-term is being operationalized. And therefore, we can see that the trend has been, short-term has contributed around 47%. Compared to last year, we are 51% in this quarter.
Okay.
And long-term has contributed about 49%. And last year, this quarter, we were 44%.
Okay.
So it's going towards better.
Okay. We saw that very sharp spikes in the price of power traded as well. Did that improve your margins? I think first quarter you did 4.4 pice per unit. Was it better?
No, margins are almost, it is better than 4 paise overall. If we just take out the surcharge and this rebate, etc., just the lean margins I'm talking about.
Okay.
But there is always a rebate and surcharge. And if you see that, we are above 6 paise in this quarter as well as in the last quarter also.
Above 6 pice?
Yeah, more than 6 paise.
Okay.
So, like to like, if we're comparing, you were above 6 paise last quarter, and this time again around the same mark. So pretty stable on margins.
Margin is quite stable, because as I said, long term is a very stable margin. So more and more long term keeps coming. Our margin stability is there, and alpha will be done by the short term and the thing, where margins are much lesser than what we get in long term and medium term.
So, Mr. Amitabh, sir, as you're saying, you are targeting at least double-digit growth for the year as a whole. What is the ideal volume breakup that you would like to see between long term and short term, and therefore a bearing on the margins for the full year as well?
See, we will always, any day, if it is more than 50% on long term and medium term, then profitability-wise, it is going to be better. Because as I said, short term, the margin realization may be 2 paise, sometime it may be 1 paise, it may be 4 paise. So that uncertainty is always going to be in the short term.
Okay. Well, if you can give us some idea of whether there are any capex plans or whether there is you'll use the cash more for dividend.
See, we have been continuously, every year we have been increasing the dividend.
Okay.
We started from 10% now. This time last year we had given 30%. So depending upon the things, we should be seeing a better dividend outflow year on year we have been deploying. Yeah.
Is there a tendency to trade and buy more from trading rather than signing PPAs now?
See, for both you have to sign PPA. The short-term trading is basically a standardized project which we are doing through a deep platform.
Okay.
But long-term and medium-term has been more through a negotiated route. Not negotiated, through the price discovered through a bidding route. But signing, because if you are going for a 3 years or 10 years contract, obviously PPAs have to be much more detailed.
Okay. Fair point. Any update on the T-Star 3 and the Karcham Wangchu PPAs?
Yeah. The Karcham Wangchu, we have been doing very well, and all the power has been flowing through us. T-Star, the long-term, though the power we are currently selling in the short-term market, because long-term operationalization takes time, because the states who had bought it takes a couple of months before they convert into long-term. So currently we are selling in only in the short-term, the T-Star.
Okay.
Which we believe next financial year it should be done through mostly through long-term.
Sure. Okay, so hopefully better margins there as well. And thanks very much, Mr. Amitabh, for joining in, giving us some idea about the second quarter. It's been a good one for PTC India. Well, on that note, let's just shift our attention from the world of equities to the world of commodities. Manisha Gupta is joining in with a roundup of all the action. What are the Saudis up to, Manisha? Good morning.
Morning. Thank you for that. Well, plenty really since last week. That's all that we've seemed to be following. Well, yes, you know, the latest, especially for the crude oil right now, is that the Saudi oil minister, Al-Niami, also seems to be under court arrest. And that really seems to be bothering the crude oil prices. Apart from that, the Saudi and the Iran tensions continue to be there. Markets also are watching out on that, on the statement that Saudi Arabia made that they are going to cut exports by 120,000 barrels per day in the month of December. And that definitely is a positive. The only reason that you haven't seen the crude oil prices run up in Asia today is the fact that the US production is the highest since 1983. So that supply production number isn't auguring well for the prices. But everything apart from that is quite positive for the crude oil prices going forward. Much of the cues are coming in from the global markets and currency space as well. The expected delay in tax reforms in US, the US jobless claims that data that came in yesterday has been on the higher side as well. And that's taken the US dollar to a one-week lows versus the basket of currencies. The dollar also is trading at a one-month lows versus Japanese yen, two-week lows versus Swiss franc as well. So the safe havens seem to be doing well. The Japanese yen, the Swiss franc, the gold prices are trading at a three-week highs as well. And the dollar and the crude oil prices in the meanwhile have seen a decline. One quick one on the metal space, and you have seen profit taking come in here as well. The weakness in US dollar is the only supportive factor, but apart from that, you have nickel trading at a four-week lows, you have copper trading at a one-month lows as well in Asia right now.